It's good, yeah. Thank you very much for joining us. We'll be starting this panel in a minute. Just bear with us, please. Thank you. Hi, everyone. Very warm welcome to the afternoon session. This session is entitled Fintech Regulatory Best Practices, and we have three subject matter experts who will talk about regulation in the context of fintech and Africa. So I'll invite our panelists, Margo, who is the partner and US co-chair of financial services sector and co-chair of financial regulation and technology at DLA Piper. Margo, please. And we have Professor Jacqueline Musiitwa, who is the international attorney and adjunct professor at Georgetown University. And we have Aderonke, who is a partner at Pavestones, please. A law firm in Nigeria.
It's just one announcement because we noticed in the room. No, it's good. But my point is to always use the microphone, unlike me. We've got a lot of people watching virtually. So.
Thank you very much. First of all, let me give you a minute or so to introduce yourself and what you're doing when it comes to regulation in your professional lives, please.
Sure. Thank you. Thank you for the invitation and the opportunity. It's really great to be here today. My name is Margo, and I am the U.S. co-chair at DLA Piper of the financial services sector, and I'm also the co-chair of the Financial Regulation and Technology Group. I have been practicing law in the financial services and technology space for nearly 30 years. Representing both financial services institutions and technology companies, probably the first wave of what you now call fintech back in 1998. I began my legal career as counsel on the House Financial Services Committee and left the committee in 1996 and went into private practice. I was part of representing a trade group, which we called the Electronic Financial Services Council way back then. Now, I think the terminology is digital. But we advocated for the use of the internet early on to be able to deliver financial services. Internet borderless medium didn't need to be US centric, it could be global. So wanted to make sure that there were laws that were enabling the use of electronic signatures and records to enter into contracts and be able to deliver products and services. So early on, that was adopted in 2000. It's called the Federal E-Sign Act here in the United States, and have helped companies go paperless ever since. I am counsel to the Electronic Signature and Records Association, and I'm also the co-reporter and counsel to an organization called SPURS, and it stands for Standards and Procedures for Electronic Records and Signatures. And it really is all things digital, notwithstanding the word electronic still. So thank you.
Thank you so much, Margot. Very much appreciated. Jacqueline, over to you, please.
Thank you so much. Thanks for the invitation. It's great to be here. Jacqueline Musiitwa, and I am an attorney as well. And my background basically started with me representing African businesses that were looking to globalize, as well as businesses looking to enter the African continent. My firm also at the time represented a lot of African governments that were thinking about regulatory reform and how to become more competitive. So a lot of the conversation we're going to have today, laws about cybersecurity, data privacy, and really how to help attract more investment, especially within the financial services and technology sectors, is kind of what I focused on for well over a decade. I shifted gears and moved into what I would call kind of the market facilitation space. And I led Financial Services Deepening Uganda, which is an organization that worked very closely with the Ugandan government to improve the regulatory environment for the financial services sector, but equally worked within the financial services space to provide support and scaling up opportunities to fintechs within Uganda. So a lot of the work that we did at the time was really a combination of advocacy, but also investment within improving the fintech space in Uganda. Besides kind of my executive roles within the financial services space, I also come to this conversation as having sat on the board of Bank of Zambia. And so I also come with a regulatory hat. And at the time, we spent a lot of time thinking about the future of the financial services sector in Zambia, what the role, the changing role of a regulatory institution is, and really how to make sure we balanced interests of innovation with consumer protection, and making sure that as we thought forward, we were really providing a space where we were able to provide access and usage of greater services, but also making sure that the Zambian people were safe in using new services. Besides that, these days I spend my time researching and also problem solving within the broader technology space on the continent, and really trying to solve for how to use technology to solve some of the, can I say, wicked problems on the continent, and really trying to balance some of the tougher issues that we haven't found resolution to, such as ethics within technology and how technologies that are being used on the continent can really do so for good, even though some of the ethical questions have not yet been answered. So that's it for now. Thanks.
Thank you so much. Very much appreciated. Aderonke, over to you, please.
Hi, everyone. My name is Adrian Alex-Adedipe. I am a partner and a co-founder at Pavestones, Lagos, based in Nigeria. We started Pavestones about 3.5 years ago with a particular interest in technology, innovation, and foreign investment. Pavestones is also a licensed data protection compliance organization. So we assist companies in ensuring that they're compliant with the Nigerian data protection regulation. As I said, we also have a lot of interest in innovation and technology, and we advise startups in the fintech space. We advise on the regulatory environment. We also belong to advocacy groups in the fintech subsector, whereby we're able to influence decisions around lawmaking and basically reviewing regulation before it is passed into law. So that summarizes what I do.
Thank you so much. And I know you are going to have a workshop later on teaching us how to navigate the regulatory framework in Nigeria. Thank you so much. So let's dive into the question we have to discuss. So when we talk about regulation in fintech, by the very sense, fintech is payment, digital payment, transfer of digital payment between point A and B. So you have sender, recipient, transaction, digital identity. So there's so much within just a single payment itself. So what regulatory frameworks govern these areas? And secondly, for a fintech company, can we even say these are a must to have regulation and these are recommended? Can we even have those kind of classification? Over to you.
I get to start? Okay, all right. With my long list of notes here. So it's a large question, and I would say fintech obviously is the intersection of financial services and technology. And here in the United States, there are a number of regulatory frameworks to consider when entering into this space. Which one applies really is based upon the financial activity being conducted. So for example, is the entity providing mobile payment and digital wallet services that allow individuals and business to make payments and send or receive money? Or is the entity lending, whether it's online or mobile apps or in person? So set aside the medium for a moment and just think about the activity. Is it a payment? Is it sending? Is it receiving? Is it transferring? Is it moving money? Is it lending? Is the entity providing advisory services, investment advisory or broker-dealer services? Is the entity issuing digital currency? And there was a panel earlier today all about cryptocurrency and some of its benefits, but that's also an activity that is highly regulated here and elsewhere. Each activity has a particular regulator or a set of regulators. And there's, this is where when you're a fintech and you're trying to get into the business, you start, your shoulders start to slump because, whether it's in the United States or elsewhere, it's either too much regulation or perhaps in some instances, maybe no regulation. But we'll just talk here from my perspective in the United States coming in. There are multiple regulators. The Federal Reserve Board regulates bank holding companies and non-bank subsidiaries and other entities, branches of foreign banks and others. The Office of the Comptroller of the Currency is responsible for national banks, as well as federal branches of foreign banking organizations. The FDIC is responsible for deposit insurance and state chartered non-member banks, so not members of the Federal Reserve Board. The CFPB is an entity that is relatively new. It stands for the Consumer Financial Protection Bureau and regulates a wide range of financial services entities, whether it's auto dealers or mortgage brokers, but also regulates federal consumer financial services laws. So whether you're a bank or whether you're a non-bank, there are laws that when you're interacting with consumers and offering financial services and products that you're going to need to comply with. The SEC regulates securities, the Securities and Exchange Commission, the Commodities Future Trading Commission regulates commodities. And FinCEN, which is a Bureau of Treasury, regulates anti-money laundering, Bank Secrecy Act, and to the extent that you're going to be a money services business, regulates and requires registration. And if that's not enough for you, then you have the states, and every state has their own laws that also regulate the particular activity. So engaging is not for the faint of heart. It's very expensive. Lending, we'll just sort of focus on lending and payments for a minute, just to give you a flavor. Lending, you need a license, whether it's federal or state, authorization, or you need to figure out an exemption. Like, why is it that the activity that you're engaging in doesn't trigger the law? You're going to have to provide specific disclosures. That's all regulated. Product offerings, sometimes interest rates, and the terms of the product are also regulated. Customer identification, anti-money laundering, and then you're examined. Really the same for payments. You just have more players in the chain. Sometimes you need to partner with banks. There are data security challenges, especially when you have lots of data that you're securing, and whether it's crypto and you're using blockchain and ledgers, or whether it's a regular sort of electronic ledger system, there's value that is being held in the cloud or elsewhere that needs great protection. So it's about the activity, but as importantly, it's who's doing the activity. So which entity in the fintech ecosystem is actually engaging in the activity? Is it, we get all the time, hey, I'm just a technology platform. I'm not doing the activity, so therefore I don't need to be regulated. That is really sometimes the case when the technology company is acting as a platform and is partnering with a licensed or chartered entity. They are providing services, but they're not actually doing enough of the service to trigger the particular regulatory regime. So technology companies can be the service provider to a licensed entity, or they can get licensed themselves to actually provide the activity. I think lastly, when you're considering, which regulatory framework a fintech chooses, and we spend a lot of time, a lot of advisory work on this. Companies call and they say, oh my gosh, there's so many choices. I can be a federal bank. I can be, what's a fintech charter? What's a money transmitter? What are all these different, types of choices that I can be? And I think the considerations basically are, what's your time to market? How soon? Everybody wants to get out there and compete. So you consider that. It's a longer term play to actually get a charter versus partnering with one. Capital is varied based on the type of entity. The likelihood of approval. So it's easier to get a money transmitter license, for example, than it is to become a bank, whether it's state or federal. The background of officers and directors is also important. Here, regulators are really looking for deep knowledge and prior experience in the activity that you're trying to offer. So all of these factors kind of weigh into your choices of what type of institution you want to be. And then the flexibility of the activities. Banks can do more than money transmitters. Banks can take deposits, they can lend, they can do payments. Money transmitters, for example, can only move and send money. So there's a lot of considerations with respect to the types of products and how to enter the market.
Thank you so very much, Margo. And this is interesting to see and understand the US regulatory framework, because as we've seen over the last few years, a lot of African fintechs are becoming headquartered in the US as well. So it's very important. Jacqueline, over to you if you have something to say about the regulation from the African context point of view.
Yeah, I think from both the Zambian and the Ugandan context, similar to the US, I think just at a more simplified scale, thankfully in many ways. And I think that it provides an opportunity, at least at the moment, for fintechs to really, one, engage with regulators and help regulators understand how their products might be different and may not necessarily apply within, the modern construct, but really help the regulators create the construct of the future. So I think that unlike here, where there is a lot that is already set in place, in African jurisdictions, there is still the opportunity to really work with regulators to come up with future or fit for future frameworks. I think just adding on to your points, Margo, I think in my experience, just a few kind of tips. It's it's really important, one, to engage with both the central bank as well as the technology regulator, just to understand which ones, which framework you will be governed by, and really to, one, make relationships. Because systems, at least central bank systems, are still very much governed by individuals, it is important to establish those relationships. It's important for them to understand what you're doing so that in case there is any nuance, you can work with them directly and quickly to make sure that they can, one, just help you roll out and get to market sooner. I've seen so many instances where people coming from abroad send in the necessary paperwork and then they wonder why it gets stuck. And so my recommendation is always make sure there is a person there to explain the paperwork that you have submitted, even though it might seem self-explanatory, but just to make sure the regulator understands what you were trying to say. I think another thing is in cases where either a law does not exist or they are still thinking about a legal framework to suit your particular type of company, I think it is important to make sure that you do engage and you provide recommendations and advice. A lot of companies I've seen kind of get into the market and decide it's too hard without really looking at it as an opportunity to really figure out how to create a system. And yes, it might take time, and yes, it might be hard, but I think that there is value in helping create and develop the ecosystem. It also helps you as a company know how to maneuver the system, which is really important. Now, what does that system mean? It's not only the central bank and the tech regulator. It means understanding, at least in parliamentary systems, what the parliamentary system requires, understanding what laws are on the books and other, potentially important players within a market. And a lot of times, companies go in and they're like, well, we talked to the central bank governor. Unfortunately, that is not enough in a lot of cases to make sure that your products are approved. I think the other kind of word of advice I have for companies entering different African markets is really kind of being part of industry associations. Could be the Payments Association, could be the Fintech Association, Bankers Association, whatever it is. Make sure that your voice is heard individually with the respective regulator, but equally make sure that you are part of a collective voice, because it is often very hard to do it by yourself. And it's much easier to do it kind of with the rest of industry. If you are registered in the US in particular, I think it's also important to make sure that if you are stuck on a regulatory matter, it's important to engage with the US Embassy. Go to them, share with them the fact that you aren't getting through at a certain point, and there are commercial attachés there that can help you also with being an interlocutor with different government entities. Without taking kind of this multi-layered approach, I find a lot of companies get stuck at different points, and it just ends up wasting a lot of time. And unfortunately, for a lot of African regulators, time is something they have and something you might not have. So I think it's always important to keep that in mind. I think with respect to kind of other general trends, I think I agree with Margot's point is there is a lot of scrutiny as you're registering as to the experience of your officers and directors. So be wise in how you present your local leadership to them. I've seen companies kind of go, oh, this person is great, they're well connected in government. It's often not enough. Make sure you select the best people to govern your company. And part of that is really just coming up with a skills matrix to better understand what's needed within that market and how to best get you to approval without making a central bank delay. I've seen many cases where a central bank just goes, we don't understand why they picked this person. And then they just drag their feet. And without you having these people confirmed, whether it is a CEO or board members, it just drags your ability to kind of get on with business. I think another thing that is kind of coming up more and more, especially as countries roll out their financial inclusion frameworks, is really just kind of being able to better articulate your impact and balancing that with consumer protection needs. And a lot of times in the past, even though it has been regulated, a lot of regulators haven't necessarily been following up. And when you look at the example, for instance, of Kenya, with a lot of the micro lenders, there is all of a sudden now this focus on consumer protection that is really being highlighted by regulators. So it's important that within your company, you're able to kind of monitor that and make sure that whatever it is you're doing is not in violation of that, one, but two, you're able to articulate how, you really are providing additional value. I think the last thing I'll say about kind of evolving frameworks is be gentle and kind with regulators, in the sense that they are learning a lot on the go. Systems are changing constantly. The role of the regulator, even from the time I sat on the central bank, which my term ended in 2018 till now, I mean, the world has changed so much. And these people are trying to get up to speed. They're trying to regulate a market. And they're trying to also figure out what is the role of a regulator in an emerging market. Is it financial inclusion? Is it, making sure monetary policy is a priority? And so sometimes there are different parts of this whole ecosystem that unfortunately get lost. And if you get lost in that, all I can say is that it'll just take time. So if you want to save on time, understand what a country's priorities are, understand how your products and services fit with whatever their developmental goals are, and make sure that you engage. That's all I can say.
Thank you very much, Jacqueline. Let me twist the question a little bit before I come to you, Aderonke. So we're talking about some of these regulations are existing in developed markets where there is existing regulations, but most of African fintechs, as we know, they operate in unregulated market, quote unquote. So as a fintech company, for example, you can take Nigeria as an example that is producing many fintechs. Internally, not necessarily that there's a compliance requirement where there is a regulation that fintechs have to comply with. That is a must. But even when there is no compliance requirement, what regulations would you recommend fintechs to institute from inception, whether from its AML, KYC? What regulation do you recommend fintechs to incorporate? And in addition to that, at what stage of their life do startups need to think about regulation? When they become unicorn, Series B, Series A, or when they are even bootstrapping or seed fund? At what stage does regulation become important? And at what point should fintechs think of a chief regulatory officer in place?
Okay, I think just as my colleagues here have identified, I would use Pavestones as an example. Between when we started Pavestones and today, there was basically no such thing as technology law or technology regulation. So a lot has changed between 2018 and now, even in a country like Nigeria. And I think very importantly, businesses must recognize that whether or not you're specifically regulated or whether or not the particular activity in which you're doing business is regulated either by the CBN, which is the Central Bank of Nigeria, or the SEC, or any other regulatory authority. There's traditional law which exists, and it's almost impossible that there is no existing traditional law which will touch on your business. So for example, everyone has mentioned here, there's the anti-money laundering laws of Nigeria, which every single financial institution must comply with. And even as a non-financial institution, if you're participating in certain financial activities, the banks are required, because obviously you have to work through the banks. The banks are required to have, certain reporting standards and certain reporting requirements. There's also regulation around data protection. Everybody is using data. Every small business is using data. Every large organization is using data. Prior to Nigeria's data protection regulation, which became regulation in 2019, there was the Nigerian Constitution, which would obviously it was quite broad. It wasn't specific to data protection, but obviously it will touch on things like privacy rights, privacy laws. So whilst, technology was not advanced enough for businesses to recognize that, look, this is targeted at our specific subsector or whatever business we're doing, those laws have always been in place. There've always been those robust laws and regulations in place. There's also the labor laws, which I think affects every single business, whether you're in fintech, whether you're in e-commerce, whatever it is you're doing. There's also IP. You're doing I see a lot of businesses in Nigeria, and sometimes I'm like, oh, who's this? Is this that one? One is with an I and one is with an A, and they're basically working within the same subsector. And I'm like, what's going on here? Some of them have logos that are quite similar. When I think a few years back, after we started Pavestones, we had a similar issue when a client came to us and said, oh, I'm working in this space. I see somebody else with exactly the same logo, exactly the same colors. I think the only difference was maybe the arc on top of, the logo was a slightly different color or something like that. And we're like, look, you need to recognize that you're regulated. So a lot of startups also have this idea of, you know what, the reason why we're disrupting is because we don't want to be bound by tradition. And therefore, we also don't want to be bound by traditional regulation. But if you have the mindset from the beginning, from early on, that, look, we don't know it all. And even if there's no regulation now, regulation is coming, right? We don't know it all. So engage somebody that probably has the knowledge of not only the industry, but just the general knowledge of the terrain. Because another point, which I think is quite important, is sometimes there's regulation. The regulation is stacked up somewhere. Nobody knows it exists. And then one day the regulators come and say, actually, this law has always existed. And now that there's a big threat, we're going to sanction you guys. It's happened with Okada ride-hailing companies in Nigeria. The laws existed for years. And
in the desk drawer.
Yeah. And nobody knew about them until, the business became a thriving one. And, there were reports about how these were unsafe for the community. And then the regulators kicked in and, Okada and the rest of them had to remodel their business. So I think, for businesses, they need to recognize that early on. And I hear you ask about government engagement. I think, again, fintechs believe, oh, you know what, we're still early. I think it's better to not make mistakes when you've become a unicorn, because when you become a unicorn, the regulators are out for you. You become a scapegoat because they feel you can afford it, right? And they know what you've been doing. So even if you made those mistakes when you were nobody and, you were pre-revenue or whatever, it will come back to haunt you. So I think it's important that, and a lot of people, again, they think it's so expensive to engage lawyers, to engage consultants at the early on stage. There's a lot of consultancy work. There's a lot of advocacy for startups, which businesses have become more startup, friendly and more startup focused. So I think, just as you said, belonging to advocacy groups, even for people like us, we belong to the Fintech Association of Nigeria. It helps shape, it's better to help shape regulation and be a part of it from the beginning than to be caught up and not even understand what's happening in the ecosystem. It's also important, Nigeria is a country where businesses thrive on relationships, right? Traditionally speaking, everyone thrives on relationships. So it's important to always stay close to the regulators, not only to help them shape, but also to know what's coming. So if something is coming and it might come back to bite you, it's better, you're ready for it and you're prepared for it.
Oh, go.
I think just a quick one, which I absolutely agree with that. I think when businesses are scaling, everything but legal is prioritized. And like that for me is just really scary. I would much rather businesses kind of put aside and kind of go, let me understand the ecosystem, even if I don't follow what the advice is, but at least I understand what I'm dealing with. And most of the people that I've dealt with, it's because they have made the misstep. And then it's, okay, how do I correct it? And it's much cheaper to, once again, know what you're doing beforehand than correcting it. But I think going to your question about, the role, do you hire someone specifically for, as a chief regulatory officer? I think it depends on the business and the model, right? I think that there is a lot that a general counsel, head of legal can do, and that can kind of be put within their remit. But I equally think that there are different sub roles here that we need to recognize. Part of the engagement is, on the CEO and the leadership of that organization to do. Part of it is for, legal, but I also think that there's a communications component that we also tend to kind of leave behind. And in a lot of cases, especially, within emerging markets, I think it's important to not only get a comms person who can make, pretty logos and, everything that makes, your brand look nice. But I think more important than that is crisis communication. Because oftentimes, whether it is a lazy journalist that writes something about you, or whether it is a true allegation, companies get to a point where they see it in the media, they freeze, and then they don't do anything. And not doing anything ends up causing more harm reputationally than actually having someone on staff who can help guide you as to what to do and how best to communicate that. And so I think when it comes to kind of roles and responsibilities, that aspect of crisis management is really important, and the one that unfortunately we don't pay as much attention to. And now with the internet, the fact that someone can tweet whatever and it goes around the world, I think it's even more important for companies that are also registered in the US and regulated in the US. Like that for me is even more important, to make sure that there is nothing that would raise any concerns in addition to local regulators with US regulators, because the amount of rigor that will be put into an investigation from this end it's exhausting and it's expensive. So it's better to avoid that.
Yeah. And I have a couple additions to that. And I absolutely agree that it's not the Wild West. You do need to think about, even if there is no license or regulation, no license for the activity or regulation in terms of how to offer a product and service, you do need to analogize to other laws and apply them to your product. But there still is always going to be the know your customer. You want to know who your customer is. Data security and privacy. So I'm just reiterating, what you said in complete agreement. And I would also think about consumer protection and put yourself into the role of, hey, we're all consumers. What's the expectation with respect to the product terms, the product disclosures, fees, services? What if something goes wrong? Who to call? Those are the types of things that not only are going to keep your customers and get more, but are going to keep the regulators at bay. So even if there isn't a specific law that says you can't do this, you really do need to think about good practices. Here in the United States, for example, there's the Federal Trade Commission and the Consumer Financial Protection Bureau, which I mentioned earlier, and they have laws that are called Unfair and Deceptive Acts and Practices, UDAP laws. And what that means is it's unfair, it's deceptive because I said so, because it just feels that way and it can change over time. So I think you really want to, when you're engaging in an unregulated environment, just put your, hey, fairness hat on and treat people fairly. That will go a long way. In addition, and I guess this isn't really so much a legal issue as much as it sort of touches all the areas, we recommend in the fintech space where you are marrying up sort of financial services, maybe they're regulated, maybe they're not, and technology, you really need an entire team. So whether it's right away a regulatory compliance officer, but you'll need legal, you'll need business, you'll need IT, you'll need to have multiple skill sets to bring to bear in getting the product to market. So don't just, go off in your silos, but do have, representatives from each of those groups, building and working together.
Thank you very much, Margot. Very much appreciated. Before I move on to the next question, we have audience question here.
Thank you very much for the panel. It's been very, very interesting. I have a question around competition and regulatory environments, particularly in Africa. So I run a company that has a Pesa wallet license actually in Tanzania. And we are facing a lot of challenges around access to customers through the telecom networks, which also run Pesa wallets. And I know this is possibly an issue in Uganda as well. And I'm curious about experiences in Africa where you have regulations that are actually fairly well written and protecting competition and, preventing the lessening of competition. However, the application of those laws become very subjective based on potential influence from very large players in the market. So these multinational companies are extremely big and extremely influential and can threaten to withdraw investment, reduce quality of service on telecom networks, et cetera, et cetera. So I'm just curious if there are any examples or any structures or frameworks that anyone has seen about how to deal with this type of scenario where it's not a question of lack of regulations are there, it's a question of, significant vested interest preventing the application of the rules that would actually improve the environment for competition and for financial inclusion in services.
Thank you very much. We'll take the second question as well. I think we have a second question here. Let's take your question and then we'll answer them one by one.
Sure, thank you. Jude Ogene, I'm the Deputy General Counsel at Paxful. And my question is, we talked about the recitation of the alphabet agencies here in the US. The flip side of what you guys have been talking about in terms of getting to know the regulator, establishing linkages, relationships, etc. The flip side of that is I would very much like to see a regulatory environment in Africa that leapfrogs the US regulatory environment, because I believe that those rules were written for bygone era. And if you could have a white sheet of paper exercise, you would not have an SEC and a CFTC. You would not have a FinCEN and state agencies with their own blue sky laws, et cetera. And so the argument that we have been making, frankly, is that African regulatory agencies have the opportunity to do something that is different and not slavishly follow US law, for example, definition of an investment contract and how we test and all of that stuff, right? So to what extent is there an appetite to seize that initiative and to bring these laws into, or bring, no one is saying we shouldn't have regulation. We're saying we should have smart, nimble regulation. And to what extent can we bypass outdated, outmoded regulatory systems such as we see in the US? That's my question.
Thank you very much. So we have about 5 minutes to address this and one last question. So feel free to pick any of the two questions and address it.
I'm going to jump into that one just for a second and offer that if the focus could be, and really curious because you all are living, breathing, and advising in that continent, but to get rid of the jurisdictional battles, right? Because there is so much overlap here, okay, between the various agencies, and just focus on the activity and the product, and how to protect both from consumer protection and anti-money laundering, counterterrorism, privacy, data security, sort of like that waterfront. and apply the rules to the activity and not really about what the entity is. You could have one license that would enable you to do all these activities so long as you did these things. You treated the product and service offering this way. That might be an option.
Okay, George, I feel personally, I think that in a jurisdiction like Nigeria, I think it's going to come to that point where the regulators would all come together and say, look, because in recent times, I can see that there's an appetite for the regulators to now really start to not necessarily regulate now, because when they're regulating, it's like they're biting, right? They're attacking, they're stifling. But I have seen that in very recent times, regulators are having stakeholders meetings where they're now coming, they're not necessarily coming together. I think the problem is most of them are still doing this in silos. So they're doing this in silos. Each regulator is trying to be the perfect one, trying to engage the startups. But I think it will get to a point where regulators realize that, look, we actually have to work together. We have to simplify regulation. We have to make this whole ecosystem a one-stop regulation shop or whatever it is, because they realize that they don't necessarily, they're trying to do their job, right? And just as someone said, we have to be nice to the regulators. It's a lack of understanding. And when you've worked in a country like Nigeria, where we're used to doing things so traditionally, and then there's just so much disruption all over the place. Even sometimes you have, and I'm sorry to say this, sometimes you have fintech reps who can't even explain their business model. Come on, what do you really expect the regulators to do? So I think that ultimately it will get there. The process might be slow, it might be cumbersome, it might be frustrating, but I already see that there's an appetite for that. And I know that, with a lot more engagement, and that's why I talk a lot about engagement, with a lot more engagement, we will get there.
I think I'm a bit more pessimistic. And I'm more pessimistic for kind of, I guess, two reasons. Turf wars. The reality is that people are powerful within their own segments. And no one wants to let go of that power. So we can sit and we can talk about it. We can agree on it. But at the end of the day, if I still, by law, have greater power, a lot of times that is exercised. So I think until we can either get to a point where, our central bank, our tech regulator is sitting with the competition authority and everyone is kind of coming together genuinely, I think we'll continue to see that happen. The other thing is, there are two things to also consider. The regulators, I think, are the tail end. I think we also need to pay attention to the legislators, who's actually bringing in the laws that enable these regulations to take place. And unfortunately, until we get to a point where we're voting in different types of people to come up with legal frameworks that, are in many ways more progressive, I think it might be hard. Now, how do we try to do it in the meantime? I think it's a combination of seeing other examples. And I think African governments are getting to a point where, Rwanda is doing that. Maybe we can try and do that. South Africa is doing that. So I think that as we start to see more examples on the continent, you might start to see slow shifts. It's not enough to say Singapore is doing that anymore. People do want to see what's happening on the continent. And I don't think we're at a point where African governments are looking at the US system, thankfully. But there is a lot of paying attention to what's happening in the UK. There is a lot of paying attention to what's happening in jurisdictions like Singapore. So I think that we do need to be aware, at least from a common law perspective, of the stronger common law jurisdictions and where governments are looking. I think with respect to the competition question, I think that's an interesting one, because I think all of this conversation really boils down to enforcement, right? A lot of times, yeah, we do have the frameworks. The question is, who is responsible for enforcing it, and then what happens? because a lot of our countries are still dominated by certain players, I think it'll be tough to get around that. I think my only advice is start to create new friends, engage as well, but equally demonstrate the value. I think when I look at some of the newer fintechs that are trying to really upend a lot of the older kind of mobile money companies, what's happening is, one, consumers are basically voting with their wallets and saying, you know what, Orange is great, but maybe Wave provides me a better deal, right? As an example. And it is after seeing millions of people sign up that even people who might have vested interests, they're forced to kind of go, okay, you know what? After a certain point, there's only so much I can do to help. The other part of that conversation is really, once again, understanding the politics and the history of people's relationships. We're all related somehow. So, you know, equally find your relations to help. And I think that, you know, it's an interesting one because our economies are very small. Our ecosystems are really small. So how can you make sure that equally within that, you have the right advocates for you within that system, which for me is where it really comes down to who are you putting on your board? And how are the people on your board not only helping you with your typical governance questions, but really how are they advocating for you in spaces that you might not be able to enter? And I think that I've seen as being more influential many times than kind of saying, well, the letter of the law says this and I'm doing that. A lot of times, a lot of these conversations are had over dinner, are had over drinks, and people are not making decisions necessarily within the confines of their office. And so really understanding that is important. I think the last part is priorities. If the product or the service that you're providing aligns with the greater priorities in the long term, I'm starting to see a lot of historic relationships kind of be put on the side in favor of products and services that are accelerating development in one way or another.
Thank you very much. We are over time. One question to leave the panelists and for you to think is how African fintechs are seen from the regulatory risk point of view. One day, a few weeks ago, because of the sanction in Ukraine and Russia, we African fintechs wake up where their bank account with Mercury being frozen up because of this perceived risk. So yes, there is unregulated market, fintechs operating unregulated markets, but how do we navigate this perceived risk in Africa? We don't have time to discuss it here in this panel, but maybe something that we can carry after this session. Thank you very much, my fellow panelists, and thank you very much for the audience as well.
Thank you.